Welcome back. Tesla shares down another 5% in the pre-market, on pace for the worst ever year for the stock. Today's drop comes on reports that the electric car maker has extended a production halt at its Shanghai factory. Joining us now with more is Craig Irwin of Roth Capital. Craig, good to have you on. You got a neutral rating, $85 price target. Walk me through, I guess, your take on Tesla, which seems pretty bearish.
Yeah, we've been consistent on this one over the last, I guess, 18 months, 2 years. We've seen Tesla as egregiously overvalued. We knew that there would be several compelling alternatives coming into the market from both new and established brands. And that's really what's playing out. I mean, you see some very, very successful entries from Porsche, from Ford, from many others like Polestar. I mean, so some of the newer names are doing well too. And they're growing at a more attractive growth rate than Tesla. 45% is still fantastic, but there's better places to put money, and people are obviously liquidating their Tesla positions and putting money elsewhere.
So you see this? You're talking about increased competition, maybe waning demand for Tesla products. You see this as a fundamental story for Tesla and the sell-off we've seen in the stock. You don't see this as a correction in terms of multiples, given the fact that we've had interest rates increase and we've seen some of these high-flying tech names, which Tesla was lumped in with, come off pretty aggressively in terms of valuation this year?
Yeah, no, you can always point at multiple things. For me, I'm an analyst focusing on an individual industry, right? So when I saw Tesla as valued at a multiple of the rest of the automotive sector combined, that I called egregiously overvalued. So yes, you can point to interest rates, you can point to short-term economic conditions, and a variety of other things, like COVID, for example, and the COVID enforcement in China. But the reality is that others are doing a good job too. Tesla blazed the way. Tesla did a fantastic job. They have great products, but they need to do a better job. They need to hurry up and do things like get the mini car on the road and bite the bullet, build that factory in India, put a battery factory in India, and dominate that market as well. These are things that will give people confidence in longer-term growth. This dancing actor in a robot suit is like a joke, right? And a lot of people that look at what was actually shown later as the state-of-the-art for 2014. You look at the semi-truck, it's something that doesn't make fundamental sense. Tesla needs to get back to its knitting. They need to focus on the mini car. They need to focus on, India and growth markets. And, it's a good company. They probably will.
Well, where does all of the other stuff, let's just like the stuff, where does that factor in? Whether it's the Musk selling shares, whether it's the distraction from Twitter, if you didn't have the concerns that you obviously do around competition and some of the other fundamental issues around the company, how would your rating be influenced, if at all, by the other things that investors are keenly focused on right now?
Yeah, so what had people concerned in the last, just say, few weeks is the fact that there was an understanding that Elon Musk was looking for another $1 billion for Twitter. So we saw Elon Musk with Jared Kushner in Abu Dhabi at the World Cup. Jared Kushner successfully raised money over there. There obviously is a leadership issue for Tesla and for Twitter. I think from a trading perspective, probably one of the best catalysts for anyone long Tesla would be if someone like Jack Dorsey or Dick Costolo was to go back to Twitter, because then people would expect that Elon would refocus his attention back on Tesla. My friends that are sort of in that little ecosystem say that Mr. Musk is very concerned about the stock price. Obviously, we did see him say that he's not going to be selling stock for the same period of time. But I think he really needs to focus on operations, focus on giving us great cars. He's done a good job so far. 45% growth, pretty impressive. It's just overvalued.